So from a current setup perspective, Bitcoin did hit all-time highs of 120,000, which is amazing. We did think it was consolidating around 116,000 and exchange reserves were declining. We were seeing a classic supply squeeze pattern. Now, to your point, we've seen a pullback today to 112,000, which we see is due to general risk-off behavior as tech stocks slide. You've been covering that today, and especially with the big box companies like NVIDIA taking a big dive, as well as the general concerns around inflation and the jobs report. But they are having a big moment. ETH for Ethereum attracted $3 billion this month, surpassing Bitcoin ETF flows, actually 16 to 1. And this is when, institutions are really discovering that yield potential. And we think that's why capital is rotating fast. So, the altcoin season narrative is dead. They call it alt SZN here in crypto land. And it's really now institutional season. And we think that Ethereum's ETF dominance signals smart money is rotating into yield-bearing crypto infrastructure assets over those pure speculative plays. This isn't 2017 retail FOMO. It's definitely institutionals repositioning. Yeah, that's a great question. And as mentioned, it's definitely based on that yield that you're able to get, that native yield, whereas in Bitcoin, you don't have that opportunity. We think it all ties back to these DATs, the corporate treasury, Bitcoin adoption, Ethereum adoption, as well as generally, again, DATs being the digital asset treasury companies. So on the one side, you have huge corporates putting Bitcoin, Ethereum, to your point, on the balance sheet, able to stake what's called staking that Ethereum for additional accrued in-kind yield, as well as others to the balance sheet, as well as these pure play crypto investment vehicles. So, just starting on Bitcoin for a second, these pure play vehicles, you have 100 billion in digital assets, 93 billion in Bitcoin. And for your Ethereum, 4 billion in Bitcoin, 4 billion in Ethereum. So it's definitely taking off. You see Bitmine immersion. So they're targeting 5% of the Ethereum supply, are creating those new investment structures. They're focused on Ethereum and ETH being on the balance sheet. So they're not just treasury allocations, they're really dedicated to that crypto capital deployment vehicles, and they're using financial engineering to raise capital. And we think that's just buoying the entire market up and making people more excited about those specific blockchains that large corporates and public companies are paying most attention to and allocating to. That's all correct. Looking at 401ks and DC. So let's try to unpack that. But I agree with everything, and that does create those tailwinds. So what's been most important that we've been noticing, and maybe me especially coming from an ETF world, is just that regulatory revolution. Under the current administration, it's just a different positive beast from what we've seen over the past administrations. And really, crypto is getting that seat at the policy table. Regulatory winds are turning, and that is just massively positive for the industry as a whole, because we always wanted and needed clarity, and that then goes towards adoption. So you mentioned the Genius Act. That was historic. And it's historic because it's really the first federal crypto law in US history. So Paul Atkins, as the new SEC chair, I'd say represents a complete 180. He owns up to 6 million in crypto personally that was actually reported. And he's also dismissed enforcement cases against some of the most major and important crypto companies such as Kraken and Coinbase. So you have these game changers, to your point, just, double clicking on the 401k. On August 7th, there was an executive order that allows crypto and 401k accounts. So when 401k money can flow into Bitcoin, we're talking about a 7 trillion addressable market. So this really, we see it as isn't regulatory capture, it's almost regulatory surrender. And the US government just handed the keys to the kingdom, and 7 trillion in retirement market hopefully flows in. So I couldn't feel more bullish after that, maybe following the ETFs, but I can't help myself there.